Premiumization has been the big growth driver for the FMCG sector despite the overall slowdown. A Nielsen I-Q report highlights that premium brands are seeing double-digit growth. Shilpa is standing by with more on the demand dichotomy, which continues. No convergence yet, Shilpa.
Well, premiumization in FMCG is not exactly a new trend. But when the urban consumption is slowing down, a Nielsen I-Q report interestingly shows that the premium and luxury segment continue to grow. And it's growing fast. The report indicates that the premium brands in the FMCG sector are consistently growing approximately twice as fast as their non-premium counterparts. And despite the overall sector unable to clock a double-digit growth, the premium segment is consistently growing at double-digit rates across all markets and across all premium categories. Now, these numbers now will paint a picture. Look, if you look at the value contribution to FMCG sales as against the mass, premium plus segments, right, they together roughly contribute about 27%. Now, this segment also contributes about 42% if you look at the sector's value growth overall as against just the mass or the mainstream segments. Now, what's leading this trend? Now, increasing income levels, urbanization, smartphone penetration, and a more aspirational consumer base. And unlike the rest of the segment, consumption volumes in the premium segment, right, that is also growing almost twice the pace of price increases. This is driven by categories like personal care, home care, processed food, etc. So this is the consumer, right, that is looking at the value more than the price and is buying more on digital platforms. Now, within the premium also, luxury brands, these are brands which are priced 2 times the category average. They are all the rage. They're standing out as the fastest growing category. Now, consumer majors recently that posted results in the past couple of days also alluded to this trend. HUL, for instance, said that premiumization trend sustained even in this quarter is growing at around 30%. And despite the overall sentiment, now Colgate-Palmolive, for instance, that said that while mass segment grew for Colgate, premium segment grew faster. And in the Alcobev space also, United Breweries volumes, in fact, the premium volumes grew 27% as against the overall volume growth of just 5%. So now, while the overall demand is subdued, India's consumer is continuing to be aspirational. And what is changing here really is what they want to spend on and how they want to spend.
And how much money they have to spend. Shilpa, many thanks for joining us. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. But for now, from all of us, goodbye. Thanks for watching.